at last September when the Fed came out with its jumbo rate cut, we're seeing a lot of parallels in terms of the economic data, and that did cause us to pull forward some rate cutting expectations we had initially envisioned for 2026, now into 2025.
One thing that's unique about your research, Winnie, is that you're talking about where the Fed's going to set rates at the same time that you're scouring all of the corporate earnings reports for the credit universe that you oversee. How much is there a dissonance between the strength that we keep talking about in the earnings and the weakness that we keep talking about will prompt the Fed to cut rates?
Yeah, there definitely is some cognitive dissonance going on in so many ways, both in corporate earnings versus the macroeconomic data, the hard data versus the soft data. And I think that a lot of people are a little bit too focused on what has happened already. We know that corporate credit fundamentals have been in good shape because we haven't seen an intense releveraging cycle as the Fed hiked rates, as we had a lot of uncertainty. And people are really kind of hanging on their hats on those credit fundamentals remaining intact. But at the same time, we know objectively that the consumer is in a worse spot than it was at the beginning of 2022 or 2023, and that there are a number of new factors and new policy considerations that corporates are going to have to maneuver. And at the same time, we have a lot of technological developments, which we're seeing have some impact on the labor market as well. So I think it's a bit of a mistake to think, okay, Q2 earnings came in much better than anticipated. Ergo, Q3, Q4 next year will all be fine as well.
Winnie, I know you're pulling forward your rate cut expectations. What happens at the end of the year when potentially, we were just hearing from our last guest, the fact Mark was talking about we could have 3.5% inflation at the end of the year. The ISM services basically signaling a stagflationary environment.
Yeah, it does make us nervous. And a stagflation light type scenario was our base case coming into this year. It feels like it's taking a little bit more time to play out than we had initially anticipated. Now, by the Fed's own summary of economic projections, they see room to cut rates, even if we see core PCE inflation rising a bit through year end, so long as the unemployment rate is also rising. It's a little bit trickier to get to an increased unemployment rate because of that participation dynamic, but that does, I think,
right now,
how do you even start there?
Leave risk assets in a little bit of a vulnerable situation if we don't have as much room for the Fed to be proactively easing, and we have these inflationary impacts and also a weakening job market. It all kind of sounds like you're setting up for some risk off and, importantly, wider spreads in credit where fundamentals finally matter again.
Why can't the Fed rate cut save the corporate sphere, given the fact that there's not that much weakness and a lot of companies have a lot of positivity? The Fed cuts a couple times, and that actually gives a pretty upbeat look to some of these otherwise neutral forward forecasts.
Yeah, Lisa, it's a good point. And we do see a path for proactive rate cuts that result in a continued bid for risk, a continued grind tighter in corporate credit. But that's really predicated on this immaculate disinflation materializing. And so far, it seems like from the soft data that immaculate disinflation is not necessarily going to be the outcome, at least in the near term, with some of the pricing pressure reemerging in services, seeing some pricing pressure in goods again as well. So it's a lot more difficult to get to that point where the Fed can kind of gradually and proactively ease rather than having to react to weakness in the labor market while also managing some re-inflationary pressures within the system.
Winnie Caesar of Credit Sites, thank you so much for being with us. Right now, we are looking at a market that is a bit risk on, although that could change. We saw that yesterday. It's been 5 of 6 days that have been down over the past week or so. I am curious about this Apple announcement. We mentioned it earlier, and Anne-Marie, it looks like President Trump is going to announce alongside Apple some sort of commitment to increase production here in the United States.
Yeah, a new $100 billion commitment. It comes at an interesting time, too. Because remember, Apple has been trying to move a lot of their manufacturing out of China into India. At a time now, Trump 2.0, there has been some serious tension between New Delhi and Washington. And I wonder if Tim Cook is going to be once again caught in the crosshairs of what is going on in the tariff story. But right now, they seem to be showing good favor with the president, saying they're going to have this commitment to build some sort of manufacturing plant, factory in the United States.
So maybe the memes of people wearing Patagonia vests and building iPhones will come to fruition. We also are tracking earnings. Airbnb expected after the bell. We did already get Disney as well as Uber and McDonald's. A positive look, and yet what we have seen consistently is markets have already priced everything in, and that really has been the theme.
Markets already priced in a lot of the uncertainty. What is going to be so interesting for the rest of the year, I think, is that we're actually going to see the tariff rates hit, and what do companies do with that?
And that's what we're going to be speaking about tomorrow with Kate Moore of Citi Wealth, who has been a little bit cautious on that. Jim Bianco of Bianco Research, former NEC Deputy Director Everett Eisenstadt, and Kelsey Barrow of JP Morgan Asset Management. Have a great day. This was Bloomberg Surveillance.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Let's talk about this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress, a change during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human being, for the world.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. Getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks, but that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
Tim, Apple making moves 30 minutes until the start of trading. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, President Trump ramps up tariff threats with India, pharma, and chips in his sights. A mixed bag of earnings adding to worries about the impact of tariffs and a slowing economy. Plus a Bloomberg scoop. OpenAI eyes a massive share sale as the AI showdown heats up. Katie, what are you watching?
I'm keeping an eye on shares of Disney right down, only about 1% lower in the pre-market. They were higher, though, initially after they raised full-year guidance on strong activity in parks and streaming, but conventional TV revenue disappointed. It also deepened ties with the NFL. We'll get into all the details coming up, Matt.
Yeah, ESPN, a big story for a lot of people watching. President Trump will announce that Apple is going to commit to spend another $100 billion on domestic manufacturing. That's the latest pledge by the tech giant to increase U.S. production of its products as it seeks to avoid punishing tariffs on its flagship iPhones. You can see the shares up 1 2/3% in the pre-market, Katie.
Yeah, interesting movement there. Let's bring in Bloomberg Tech co-host Ed Ludlow, who joins us now from San Francisco. Ed, there is an embarrassment of riches when it comes to tech news this morning. I want to talk about Apple, but I want to talk about AMD. We think back to what we heard from the company, a little bit of disappointment, and you can see that in shares lower by about 5% right now in the pre-market.
Yeah, so in the quarter that they just reported, their data center business is the key thing to watch. It was strong, but that's in part because even if there's some volatility around GPUs, AI accelerators that go into data centers, particularly around China, their CPU business really held up. The thing that the market's nervous about is that we know the situation with China has changed. They have a specific chip for that market called the MI308. And what they did not tell us was a prediction or an outlook of the pathway for sales to resume of that product. So we know where the White House and the administration stands, but what we don't have in their outlook or any communication from the company is what happens next. Because some of the most bullish names on the street think that China can represent billions of dollars of revenue for AMD next year and go to one extreme, but the company did not communicate that.
I want to ask about Apple. The other day I asked Mark Gurman how many iPhones would be made in the U.S., and he laughed at me. So I guess that's not the goal, but it does look like Apple's going to be spending well over $500 billion in the U.S. in the next 4 years. What do we know? What's new?
So this is huge in technology, and this is what you need to know. It's a $100 billion additional spending on top of $500 billion that Apple had already announced to spend over the next 4 years. The money was very specifically targeted. There will be a server manufacturing facility. A lot of that money will go to its supply base within the country. There's also some kind of training element to it as well. Apple has been really emphasizing how much commitment it has to the United States for semiconductor production. They keep giving numbers of chips that are coming out of US fabs. That's important. But what this doesn't answer, remember, this is Bloomberg reporting citing an anonymous White House official. We think the answer will come later today. This is an expansion of a financial commitment to the United States from Apple, but it is not going as far as to say we're going to manufacture the iPhone in America. That's very separate and very distant and seems unlikely still.
Well, you think back to earlier this year when the president warned that he would hit Apple with a tariff of 25% if it didn't move manufacturing of the iPhone to the U.S. I mean, this is political in nature. I think it's pretty safe to say that openly, Ed. So even if they don't fully move all of their production of the iPhone to the U.S., which many agree would be a little bit impossible here, at least this is an olive branch which might keep them in the administration's good graces.
Yeah, since the turn of the year or the inauguration, Tim Cook has not been the president's best buddy. Jensen Huang, NVIDIA CEO, has been the president's best buddy, essentially. And it's been fractious, and the stock in the first half of this year, Apple I'm talking about, traded reflecting the risk of the president's attitude towards supply chain tariffs and Apple's move or not to manufacture the iPhone in America. The vast majority of people that we speak to on Bloomberg Tech and anything that you read would suggest that that idea, manufacturing a handset in this country, is highly unlikely. Not because you can't build a facility to do it, but you have to build cities worth of supplier facilities around that. That's the picture you see if you go to mainland or Greater China near a Foxconn facility. You have basically a little city with all of the core component supply base around it. And America doing that, along with a lack of skill set in tooling, and that level of manufacturing, that's the main barrier right now.
By the way, Ed, speaking of $500 billion, Shirin Ghaffari, after the killer story on reverse acqui-hires yesterday with Kate Clark, comes out with some news last night that OpenAI is going to raise even more money at a $500 billion valuation. This just continues to grow and grow.
Yeah, OpenAI has a lot of momentum. There's a key point and key distinction here. that this is a tender or secondary offering. So OpenAI is going to allow some employees and early investors to sell their shares. In other words,
borong Bitcoin ya, kita akan borong Bitcoin lagi. Hari ini tanggal 6 ya, biasa gue bikin tanggal 1, mepet sedikit ya. Tanggal 6 kita akan lanjut borong Bitcoin episode ke-27. Di mana di setiap episodenya, di sini gue akan bantu kalian untuk memandu kalian dan mengedukasi juga ya terhadap aset Bitcoin ini, dan ini udah kita lakuin selama 27 bulan ya. Jadi ini masih konsisten sampai bulan ke-27, nanti sampai bulan 30, 35, 40. Di sini tesis gue akan tetap ya, di mana gue percaya 5-10 tahun ke depan Bitcoin akan tetap menjadi aset ibaratnya yang gue bilang terbaik. Memang kalau kita lihat secara harga ya, kalian mungkin tanya, oh hari ini Bitcoin tuh bagaimana harganya? 1-2 hari itu nggak ada manusia di bumi ini yang bisa tahu. 1-2 bulan juga nggak ada yang tahu, bahkan 1-2.
Ed Ludlow, don't miss his interview, by the way, with AMD's CEO, Lisa Su. That's at 11 a.m. New York time when his show kicks off, but there will be a lot of coverage, I'm sure, on Apple. There will be a lot of coverage, I'm sure, on OpenAI. Bloomberg Tech is a show you have to watch.
Top 5 parfum murah yang sering banget gue pakai sehingga jusnya ini tuh udah hampir habis, guys. Ini ada di honorable mention karena gue tuh cek di online ini tuh udah nggak ada, nyaris nggak bisa kalian temuin lagi. This is Larifa gua, ini tuh adalah go-to gua untuk ngantar anak ke sekolah dan juga beberapa kegiatan ringan lain yang mengharuskan gua tuh harus tetap wangi walaupun tidak sampai harus menggelegar banget. Masuk di nomor 5, guys, gua bakal spill dengan Lin Yong Club City 420, dimana ini tuh enak banget digunakan sehari-hari, guys. Udah berkurang kisaran 30 mili dan ini aromanya mirip seperti Carolina Herrera 2124 Man yang menjadi legend untuk semua orang gitu. Fresh cut grass dan daily wear ini tuh perfect. Nomor keempat, ini adalah Bonjour Quantum. Nah, ini tuh udah berkurang di kisaran 50 mili. Dan ini tuh adalah aroma yang mirip banget seperti Antonio Banderas Blue Seduction, but ini adalah versi yang lebih kuatnya gitu. So bagi kalian yang merasa Blue Seduction itu lemah, ini adalah jawabannya. Begitupun gue, guys. Gue suka banget pakai parfum ini untuk daily wear. Ini cakep banget. Bisa kalian lihat dari jumlah jusnya. Next, untuk parfum sore ke malam, guys, gue suka banget pakai Larif Heroic Man. Dan bisa kalian lihat, tinggal kisaran 20 mili kali ya. Dan itu habis gitu, guys. Gue udah beli backup botolnya karena memang ini parfumnya enak banget. Chestnut dan juga vanilla, lavender, perfect untuk kalian tuh ngedate tanpa bikin kantong jebol. Satu juga yang gue gatekeep selama ini, guys, this is George.
Apa kabar Indonesia, Pak?
Kita sangat.
Your streaming profit guidance of $1.3 billion, though, points to a modest sequential deceleration in the fourth quarter. How big of a worry is that when you think about how Disney is positioning streaming, which seems to be the future here? How much confidence do you have in their trajectory?
A lot of confidence, Katie, and that's just because, they have, obviously one of the best content pipelines here with their movie studio, with all of the different TV shows that they have. Yes, we've seen a little bit of, in terms of trends at the Disney Plus subscriber trends, they have been there's been a little bit of a slowdown, but I think that is stabilizing. But I think what we're really kind of looking forward now is this integration of Hulu onto the Disney Plus app. And what that's going to do is not only does it kind of position this as a one-stop shop in terms of streaming, but it also helps them kind of remove a lot of duplicative costs, whether that's, marketing, whether that's, all of this, new AI or getting more personalization features, getting more enhancements. It really kind of enables them to do that in a much more efficient way. And so, yes, they did increase profit guidance for the entire streaming unit from about $1 billion to $1.3 billion. But I think, they're being a little bit conservative. I think we can continue to see a little bit more upside as they kind of, execute on the integration of those apps.
All right, Geetha, really appreciate the context there. That is Geetha Ranganathan of Bloomberg Intelligence talking us through those results that we got from Disney. Matt, I just want to quickly meditate and look at the one-year chart of Disney because I find it really inspiring. You think about the bounce back that they've seen since April, just a roller coaster that's going up over the past year, higher by about 32%, outperforming the S&P 500. A lot of that just came in the last few months, though.
Yeah, it's pretty impressive. To me, the big takeaway from this story is that you're no longer going to need, I hope, a cable subscription to watch NFL football.
Yeah.
Right? Now, finally, they're apps, their over-the-top product like Disney Plus or ESPN Plus is going to be able to show me the football that I need.
That's not huge for me, but I'm really, really happy for you. And I'm
Thank
sure
you
a lot
so
of people watching are also psyched about that. Maybe that explains the excitement in the shares. But let's take a quick check on futures at the moment. We're about 20 minutes away from that opening bell. You can see a little bit of a lift in the S&P 500 right now, higher by about 0.2%, a little bit less if you take a look at the NASDAQ 100, higher by about 0.2%. The little guys are your laggard today, but the Russell 2000 still higher by about 0.1%, Matt.
Some more movers on our radar. Snap, as in Snapchat. Apparently the kids still use this. Reported a slowdown in advertising revenue growth due to a technical issue with its ad buying tools. Mandeep Singh told me they have 500 million daily active users. That seems impossible, but apparently
there's a lot of high schoolers out there.
Apparently they have 98 million in America, in this country.
Yeah.
Which seems like a lot.
Seems like a lot, but you can see the shares down mightily right now. When we were checking this morning, we were surprised to see the market cap is almost $16 billion. Obviously, that number is going to be chopped a little bit today. Let's talk about McDonald's, though. McDonald's sales picked up last quarter and says that they will accelerate in the current quarter. McDonald's shares up 3.4%. A lot of strength overseas as well, in the U.S., but more so internationally.
It's difficult to hear about that so early in the morning.
Well, we have another mover for you.
Novo Nordisk sales showed the weakest growth in 4 years as the company loses ground to Eli Lilly in the U.S. market for obesity medicine. So it makes sense to see McDonald's shares up and Novo down.
There's your pair trade.
Yeah, exactly. But I guess people are just using tirzepatides, as in Zepbound and Mounjaro, more often than Wegovy and Ozempic.
Yeah, absolutely. We know that Novo has a lot of idiosyncratic issues right now. They appointed their new CEO, and he has a big job ahead of him. And ahead for us, President Trump ramps up his tariff blitz. We'll bring you the latest details next. This is Open Interest.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Our applications have been received positively both in Kenya and UAE, and we are optimistic that we should be able to open the office in the fourth quarter. We think the Middle East have deep capital sources. It has strong logistics for trade, and it is a strong center for investment. And we are seeing increasingly the global GDP is increasingly becoming overweight in Asia and Middle East. So that linkage with the middle income segments growing in India and China, it will provide a very strong market.
Up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Alberta, Canada, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Let's get now to high interest. Look at what's making headlines around the world. Apollo is agreeing to buy a majority stake in the hyperscale data center developer Stream Data Centers. Alternative asset managers like Apollo have been spending big money on data centers as the rise of AI spurs power demand. Morgan Stanley says the capital expenditures on AI could exceed $3 trillion in the next 3 years. You can see Apollo shares after the gain yesterday up again today, but they've had a rough year. Rivian is softening its forecast and warning of mounting losses thanks to President Trump's tariffs and changes to the EV tax credit structure. The levies are expected to raise costs by a couple $1,000s per car in the second half of the year, according to the CFO, and they're only going to make 40 to 46,000 cars, like hand making them one at a time. The shares down more than 5% in the pre-market, and they have already been crushed. Health Secretary, hi Katie, Robert F. Kennedy Jr. is canceling nearly $500 million of grants and contracts for developing mRNA vaccines, the vaccines that fight respiratory viruses like COVID-19 and the flu. The changes also include the cancellation of an award to Moderna for a bird flu shot. So they're going after those vaccines just like you kind of knew that they would, Katie.
Well, to that point, Matt Miller, President Trump is ramping up his tariff threats, saying that announcements on chips and pharma, to your point, those tariffs are coming soon. Let's discuss with Bloomberg's Washington correspondent Tyler Kendall. And Tyler, this is what the president has said he's going to do, but it feels like it's just very incremental at this point. That certainly seems to be the read from the markets when you take a look at the reaction function to these different announcements. So give us some context here. How imminent is coming soon in actuality?
Yeah, definitely, Katie. I mean, there is a lot of perhaps ongoing uncertainty when it comes to the timeline, because we have heard for really months now that some of these sector-specific tariffs could be imminent. And we know typically these Section 232 investigations could take an upwards of 9 months to complete. But the White House does say that they appear to be closing in on some sort of announcement. And in fact, we did get a little bit more clarity, at least on the pharmaceutical end, on how those tariffs could be structured. The most clarity that we've really gotten in recent weeks, which perhaps could point us towards an announcement. President Trump saying that those tariffs are going to start out at a lower rate and then build up from there. He said after a year to a year and a half, they could reach up to 150%, with the ultimate end goal being 250% pharmaceutical tariffs. The idea being that it's going to take time to reshore production and move those supply chains. Because Matt and Katie, we have to keep in mind here, these Section 232 investigations, they're investigations into the entire supply chain. So that means that once tariffs are announced, they could be on those finalized pharmaceutical products, but they could also include the ingredients too, which only further complicates how these private companies are looking at restructuring their supply chains.
Tyler, I found the India tariff fight particularly fascinating because, you know, when Russia invaded Ukraine, the EU and the U.S. put sanctions on Russian oil. But we all knew they were going to keep selling it to India. India would refine those products and then sell them back to Europe because Europe needs that oil. But President Trump seems to be finally nipping that in the bud, and he's gotten help from Saudi Arabia and OPEC. As they continue to raise production, he can squeeze down on Russian oil even more. Does anybody else see it like that?
Well, Matt, actually, it was really interesting because our analysts at Bloomberg Economics put out some data which shows that India takes about 37% of Russian exports. And at the end of the day, these barrels are expected to just be dispersed elsewhere in the market. So our analyst read is that this is actually more about leverage in the trade negotiations more than anything else. At the same time, though, we know that Russia is trying to stave off any sort of economic penalty, and our own reporting indicates that there could be a potential concession put on the table here to try to back President Trump off this so-called secondary tariff threat. People familiar are telling Bloomberg News that Russia could be prepared to offer an air truce to try to get ahead of these secondary tariffs, though we should say that the understanding is that Russian President Vladimir Putin is not looking for a more definite ceasefire. This would just be an air ceasefire to try to get some sort of reprieve there, as Special Envoy Steve Witkoff is in Moscow for those negotiations. But really, when it does come to India, President Trump said that over the next 24 hours, we could see some sort of update on the so-called secondary tariff. So it's something that we're watching closely as the White House does appear to double down on this and what else that could potentially mean for those other importers like China, for example.
Well, just quickly here, Tyler, another thing we're watching very closely is whether or not we get a decision from President Trump on who that next Fed governor might be after Adriana Kugler vacated her seat. We heard from the president yesterday saying that his pick could come by the end of this week. What is the latest on that horse race?
Right. Well, President Trump says that he has 4 names in mind. He named the top 2 that we've already been discussing, of course, for at this point weeks. The 2 Kevins, former Fed Governor Kevin Warsh, as well as NEC Director Kevin Hassett, which would mean that there are 2 additional ones. He did appear to rule out Treasury Secretary Scott Bessent, saying that he himself has said that he is not interested in the job and he wants to stay leading the Treasury Department. Really, one of the key things that we're going to be looking for is indications on whether or not this is perhaps a more permanent appointment, since we know that Kugler leaving her seat that was originally expected to vacate in January could lead to perhaps a more longer-term appointment down the line on the FOMC.
All right, Tyler, thanks very much for your coverage. Tyler Kendall there in Washington on top of it all, and there is a lot on top of which to be. Coming up, markets are ignoring recession risks, according to a Goldman macro trader, but they just keep barreling on. We'll discuss that with Jim Caron of Morgan Stanley next. This is Open Interest.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachian Zahran, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets
with the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Well, Goldman Sachs says that market momentum is getting, quote, irrational as Wall Street ignores recession risks. In a note to clients, a macro trader wrote that investors are too short-sighted due to ever-changing economic and geopolitical forces. He believes that investors are likely to disregard a possible labor market slowdown, instead focusing on strong liquidity as well as structural growth themes. Let's bring in Jim Karen. He is Chief Investment Officer of Cross Asset Solutions over at Morgan Stanley Investment Management. Great to see you in person, Jim. Let's dig into that a little bit because, you know, strong underlying growth momentum doesn't seem like necessarily a bad thing to focus on.
No, I think there are two sides of the risk, and the risk to the upside is a risk, and like any other risk, it needs to be hedged. That's my tagline. I always talk about that. So I don't think that the markets are ignoring recession risk. I believe that the markets understand that there's a healthy component of downside risk possibility, but there's also a healthy component of upside risk possibilities too. And so if we get through this patch of data that we're likely to go through in August and September, and people are going to start talking about stagflation and valuations and equities, what if we get through that? And what if that turns out that Mary Daly's correct, that inflation's not really permanent, we're going to get through this? Then what we're likely to see in the fourth quarter and into the beginning of 2026 is all of the positive benefits from that one big beautiful bill act and accelerated depreciation, CapEx, and everything else. And there could be a lot of upside. And you're starting to see hints of that in earnings data right now.
All right, Jim, we're going to keep you with us through the opening bell. Jim Karen with us this morning. A check on futures. We're looking at some gains. The opening bell at the NYSE and the NASDAQ next. This is Bloomberg.
A cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Nisho tanya ki kon ahma ta suara pango ahma le pa manchang le nyai kon mama nya.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. Quick check on futures after stocks were under pressure yesterday. We're looking at the green again today. Just about 0.2% on S&P futures, a little bit less or the same on NASDAQ futures. We had kind of a mixed bag of earnings, and I think traders are waiting to see what happens today in terms of the tariff threats that we got yesterday. You hear and see the opening bells. So exciting. Down the New York Stock Exchange, BlackBerry ringing, as if we needed another parallel to the internet bubble. BlackBerry ringing the opening bell. I miss my
I loved my
BlackBerry device.
I had a pink one in college.
They don't do that anymore. Now they provide solutions, right?
Of course.
Down at the NASDAQ, Terra is a SPAC, and they're looking to get into the agribusiness, brought the whole family, which is fantastic. They've only been trading for a little bit, but they're still doing better than BlackBerry. Okay. You know?
Well, let's talk a little bit about Disney. We've been watching Disney shares, but I'm actually going to talk to you about Apple. Scratch that. Apple. President Trump said that he will announce that Apple will commit to spend another $100 billion on domestic manufacturing. That is the latest pledge by the tech giant to increase U.S. production of its products as it seeks to avoid punishing tariffs on its flagship iPhones. We were talking about this with Ed Ludlow, that full manufacturing of the iPhone in the U.S. is probably a pipe dream. But in terms of staying on the administration's good side, this goes some of the way towards that. You can see the shares of Apple currently up about 2% right now, Matt Miller.
All right, watching AMD as well after it put out earnings yesterday. It came out with an upbeat forecast, but the company was unable to give a clear outlook for resuming sales in China, which is concerning analysts on the street. You can see the shares down 6%. They had been outperformers. I will say AMD was up like 46% year to date, and you know, NVIDIA was only up 36% this year to date. So they're doing a little bit better even with today's losses. Still with us, Jim Caron, Chief Investment Officer of Cross Asset Solutions at Morgan Stanley Investment Management. Great to have a cross-asset guy in here. That's Katie's day job.
That's
true. She works on the cross-asset
team reporter.
Desk over on the other side of the office. When you say you should be hedged for downside risk, and I don't think anyone's expecting like a 50% chance of recession, but 25, 30 doesn't seem unreasonable. How do you do that?
So look, I mean, there's a couple of ways. Number one, your first line of defense is diversification, right? And everybody talks about that. So owning a healthy amount of decent quality bonds alongside your equity. But what you have to understand is on your equity side, the part of the market that's generating the returns and the growth is that higher risk, higher beta component, which is mostly the tech, the Mag 7 that that everybody discusses. So on the other side of that, what you really need to start to think about is look at things through a global lens. And that's what we do at Morgan Stanley Investment Management, is we tend to think about how do we hedge our growth exposure with value. But does it have to be value in the US? It could be value in Europe. So what we've done is we've looked at growth sectors in the US, and we've hedged that with large cap value, but in Europe. You get the benefit of an appreciating euro versus the dollar, and so far this year, the European equity markets have actually done really well. So both have actually worked. The growth component in the US has worked, and the value component within Europe has also worked. Bonds, you're getting the coupon. And bonds are doing very well on a risk-adjusted basis. There's nothing wrong with holding a decent amount of bonds in your portfolio. It's just that it doesn't seem that they're going to generate high single-digit or low double-digit returns. I think it's a coupon game that you're playing in bonds.
There's a lot to focus in on there. So let's talk a little bit more about European equities. I'm wondering how those conversations with your clients sound like, because there's so many investors out there that are trying so hard to ignore what's going on in Europe right now.
So it depends where your client is. And what I find, ironically, is that most of my European clients are the most negative on Europe. Most of the U.S. clients really just see it as, oh, we have an underweight, it's doing well, we need to get back up to market weight, how much Europe should I actually own? What I think is really being missed by the market is the power of deregulation that is likely to come through in Europe. So we talk about this stimulus and this, this trade deal that Trump has done, and the $600, billion potentially from Europe. It's not so much about an investment that just comes in from the European Union as like, here's the cash, here it is. a lot of it comes from deregulation, which doesn't cost the European policymakers anything. All they have to do is they just have to take their hands off the means of production a little bit, allow the free markets, allow the capital markets to work within Europe, and what you're likely to start to see is enterprise value creation. Enterprise value creation in Europe, that's a big deal. So that makes us positive. But within Europe, we are very specific about the mid-cap DAX because we like Germany, and also the European financials because we think that European financials are the early winners. They've been doing well. Yep. We think they're going to continue to do so.
And they're doing it, by the way. They're giving you a much lighter touch in Brussels. The Germans, of all people, are finally spending money, right? And there was a great story in the Terminal this morning about another $100 billion fund that the Germans are investing in. It's like a sea change there. I wonder about the bonds part of it, though, because are we still looking at 4.20 on the 10-year? Like, it's unbelievably low yields, at least when I think about the fact that baby boomers aren't saving money anymore. The rest of world, again, is maybe going to look at the euro instead of the dollar when they do bond issues. We don't really have as much Fed independence as maybe we had last year, and if we don't like stats, we just fire the statistician. Like, all of these things are bad news for rates, right? It's got to put upward pressure on rates.
It should, but there's a lot of money that's out there. So where does it go? So if you're going to hedge your equities, and bonds are a really good candidate to do that, there's a lot of money out there, and the supply of bonds is relatively not in government sector. In more of the corporate sector, the supply is really, really low. So effectively, there's a lot of crowding into the bond market because of the high levels of cash and also the significant amount of money growth that's taken place over the last several years. This is all very supportive. The other thing, though, too, is we have to start to think about these inflation numbers. We have one coming up next week. It might be 2.8% in CPI on a year-over-year basis. But I think those numbers are pretty much peaking out somewhere around that 3% level. And if it does start to come back down, people then start to say, well, maybe I should start to add some duration to my portfolios to potentially capture some extra returns. If the Fed's going to cut, which it seems like they will, this could be a place that not only is a reasonable hedge in your portfolio, but it could also be an attribution to return as well.
All right, Jim, we got to leave it there. It's always great to speak with you. Thanks for joining us on set. That is Jim Caron of Morgan Stanley Investment Management. Let's talk a little bit more about Disney. I was really eager to do that at 9:30. We're going to do that right now, though. Disney's earnings, they beat, but the shares are falling as a tough climate for movies and traditional TV overshadowed growth at its parks and streaming business. Let's discuss with Wolfe Research analyst Peter Supino. He has an outperform rating on the stock with a price target of $139. Great to have you with us, Peter. Let's talk about what we're seeing right now, because it seemed like there was a lot of good news when it comes to streaming. We know that Disney has been positioning that as the future of the business. With that in mind, why do you see this drawdown right now in shares?
The stock price reaction today doesn't make much sense to us. Disney reported objectively good results, increased its guidance. The only real explanation we can come up with that's fundamental is that Disney withdrew its intention to continue providing subscriber results. So they're mimicking or following Netflix lead by withdrawing that form of disclosure beyond 2025. And so investors are probably uncomfortable with that. Otherwise, we think Disney was somewhat crowded before this report, and that the guidance increase that they reported was generally expected.
Well, Peter, I know you have an outperform rating on shares, but you mentioned investors are uncomfortable with the fact that they're not going to be disclosing subscribers. Are you uncomfortable with that? How much harder does that make your job of analyzing this company?
So I think it's great. And the reason I believe it's great is because the period of time when it was appropriate for Disney and the industry to be reporting granular data to Wall Street about subscribers and ARPU was the period of high growth in which valuation multiples needed to correspond to those perspectives on future growth. Today, in the United States, streaming is a very saturated, mature business for those households that receive their TV that way. There are almost 90 million U.S. subscribers to the sum of Disney Plus and Hulu, it's almost as big as Netflix in the United States. And so it makes sense to run the business differently and with an eye towards balancing units and price and margins. We're into a different era for streaming.
But Peter, you're an analyst. I mean, what other data would you like Disney to hide from investors?
You know, it's
like,
interesting.
Why would you want less transparency? Why not
it's
every day, you know?
It's a great quip, but you should look at the Disney earnings release and you'll see an enormous amount of information and granularity, much more than you'll see from other industries. It's our view that generally speaking, the media and telecom coverage that we have at Wolf Research reports more KPIs and more detail than most conglomerates across the S&P 500, and sometimes it can be counterproductive.
Appreciate you playing along there. It does seem a little bit unintuitive, but I hear what you're saying. Let's talk a little bit about conventional TV, because it seems like that is the weak spot here when you take a look across the business lines. I mean, it seems like this is an industry-wide issue. Is there anything that Disney can particularly do here? Any levers that they can pull, or do they just have to be content with the overall environment?
Well, it's extremely difficult to have any exposure to the linear TV bundle. We wrote recently that the only things that are certain in life are death, taxes, and the decline of linear television. And so the good news for Disney investors is that everybody who follows this stock on the buy side or the sell side has underwritten, you know, a steady, permanent decline of linear TV in their earnings model.
We hope TV has a long, long life. And we hope you come back and join us. Peter, Wolf Research analyst Peter Supino there talking to us about Disney. A lot of moving parts here, and it's going to be a stock we're watching definitely all day long. Coming up, Brian Reynolds' ad tech company is out with its first earnings report since the IPO. We're going to get the view from the CEO of Mountain. Mark Douglas joins us next. This is Open Interest.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appear, immediately I ask whole corporations study how will you bring generative AI to their job.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
The ad tech company Mountain is out with its first earnings report since it debuted as a public company in late May this year. The results are strong as the company reported better than expected earnings and an outlook that impressed. We see analyst after analyst raising price targets on the stock. Joining us now to discuss is Mark Douglas, Mountain CEO. And Mark, great to have you here. I do want to get your take on some of the other stuff going on in media, especially Disney. But first off, tell us about the earnings, because I see Evercore ISI raising its target, Morgan Stanley raising its target, Needham raising its target, and it goes on and on.
Yeah, well, the company had a great quarter. We definitely beat analyst expectations. Adjusted EBITDA was up 92% year over year, revenue up 35%, the performance TV revenue up 35% year over year. So great quarter. We're excited. We're very bullish on our future, and just gonna keep stringing together quarter after quarter. That's our goal.
It's worked so far. The shares are up now 82% since you went public, which was what, May
22nd.
22nd.
Yeah, right before Memorial Day weekend. Then I went to a music festival after.
What festival?
I went to Bottle Rock, which is great music festival. I had a great weekend. You leave the New York Stock Exchange and then you get live music.
It's a good little honeymoon. It's a good little
honeymoon. What more could you ask for?
Okay, so you're fresh off your first earnings report. I was reading through the transcript. You made the point that while others chase the top 1% of advertisers, we've gone the other way. I'd like to get a little bit more detail there. What does that look like, that strategy?
Yeah, so television advertising, and now we're focused entirely on streaming TV, and essentially the market is, that's where all the consumers are, has been this medium for the world's largest brands. And we've democratized it to make it so that any size brand, especially small and mid-sized businesses, direct-to-consumer brands, e-commerce brands, challenger brands, can now use TV to find their next customer, and can do that alongside of the other channels they've traditionally used, which are paid search and paid social. So our platform enables that. Customers just come to Mountain in order to get on television and do it in a very targeted way and be able to measure the impact.
So, I mean, what's next? You just continue to execute that strategy? Is there something you're pushing, a lever you're pushing for growth? What's your plan to continue this run? Because you've already basically doubled your stock in 2 months.
Yeah, so we continue to invest in customer acquisition. We can sense that we've gone from where we're evangelizing this as something SMB business can do to where now they're aware. And so we're just opening up the door, bringing a lot more small businesses. We have new technology coming. We effectively kind of pre-announced. One of the challenges our customers have is they don't have the production budgets that you typically think about with TV commercials. So with the advent of AI, we have
and Ryan,
and of course Ryan, and we're partnered for tools around that we're going to be announcing in the not too distant future. We have a division of a company called QuickFrame, which is a marketplace of thousands of independent creators to help our customers build ads. And this is not just small businesses using this. This is larger businesses too who want to do more content and do it faster, and so they're just as interested.
So it's not just placing the ads, you're helping them find ways to produce the content at a lower cost.
Yeah, the stat about our business I'm most proud of is 97% of our customers have never advertised before on TV when they launch a campaign on Mountain. So, but that also means 97% have never produced a television commercial when we meet them. So we have to help them with both problems, and we've been doing that for a while.
Well, let's talk about the overall landscape that you're operating in. We got Disney results this morning, and it was a pretty dire read on the state of conventional TV. Their income from conventional entertainment TV fell about 28%, and we were just having the conversation with Peter Supino that it seems like linear TV is in a bad way right now, and there's not a clear light at the end of the tunnel. And just curious your read on the situation.
Well, I think that's true. I mean, essentially, people who still have cable subscriptions cancel them at the rate they move. Like, you don't move and then call the cable company anymore, right? You just, let's say your TV, you don't even play, you know, you just turn on your Samsung or LG TV or any brand, and all the apps are on there. You can watch television instantly as long as you just, you know, connect into your Wi-Fi network.
Including Bloomberg.
Yeah, and Bloomberg, of course. Yeah. And so, but the way to think about it, I think when mobile first came about, people thought of it as something new, but it's really the same consumers just having another way to access the internet, and streaming is the same thing. Yes, their linear businesses are declining, but at the same time, the streaming businesses are growing. Their business models are shifting a bit, but overall, people are going to want, if you give people what they want in the way they want it, they will consume more of it. It's really easy. So they're just going to watch more streaming content, and all these networks will do
Well, is the deal with ESPN and the NFL going to make it so I don't have to have cable to watch football on the weekends? Because if you don't have to watch live sports, and the NFL must be one of the most valuable leagues in the world with F1 and whatever World Cup, you know, if you don't have to watch live sports, there's really no reason to have cable TV.
Yeah, I mean, I think on streaming, people obviously still want to watch live. And so one of the things you see ESPN doing, and Disney in particular, is bringing live sports to streaming, bringing and the ads with it. And so you'll still be able to watch live. You just won't, as you said, you won't need a cable subscription to do it. And if you look at, more consumers are coming into streaming with ad-supported options or hybrids, subscription and ads, than are going subscription only. So consumers have clearly decided, look, if the ads are entertaining, they're targeted to me, they're broader than just the world's 1% of the world's big brands, then that's an experience I'm willing to partake in alongside my favorite shows, my favorite sports games, and so forth. So this is going to, I think you're going to see a lot of growth in the media business in the next few years, especially as live sports really starts to find a home in streaming.
All right, Mark, great having you in the studio, especially after your first earnings day. Mountain CEO Mark Douglas, fresh out of 15,000 one-on-one analyst meetings. Coming up next hour, more earnings insight from the C-suite. We'll sit down with Stephen Yalof, the CEO of Tanger, which operates shopping centers across the United States. This is Bloomberg Open Interest.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to Open Interest. Let's get a check on this market right now. We're just over 20 minutes into the session, and you can see it's just about an even split when it comes to the S&P 500, about 0.2% higher, 267 names in the green. Up top, this is interesting. Apple is your biggest contributor to the upside, adding 12 points to the index right now. That's after Apple recommitted and added to its commitment of how much it's going to invest in the U.S. over the next couple years. Obviously, the market liking that sign of goodwill from the company, sending shares higher by about 3.5%. Train your eyes on the downside, though. Advanced Micro Devices, AMD, is your biggest loser right now, down 5%. That's taking about almost 2 points off the index. Of course, they reported earnings last night. China still an issue for the chip maker, as it is for many of the companies in this index. Let's take a look at sectors as well. I think this is interesting, too, because you take a look, another even split, just about the same number of green bars as there are red bars. Energy up at the top. You wouldn't necessarily know it by looking at the single names here, but energy higher by about 1%. Mac, consumer discretionary, big tech, and then you take a look at the bottom, your laggards today, industrials and healthcare. That's actually a familiar sight by now. Healthcare down about 1% as well.
Yeah, oil rallying more than $1 a barrel. But we're still only at 66.21 for Brent, 68.70. 66.21 for NYMEX, 68.70 for Brent. Not big numbers. Coming in the next hour, Ann Berry talks sky-high valuations, really big numbers for companies like OpenAI and Palantir. Plus, we're going to talk about the convergence between public and private markets, as well as outlet malls. This is Open Interest.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. We're hearing from the family of one of Jeffrey Epstein's accusers for the first time since the sex offender's co-conspirator, Ghislaine Maxwell, offered to testify before Congress in exchange for clemency.
Virginia Giuffre, one of the most vocal victims of Epstein and Maxwell, took her own life in April. Her sister-in-law, Amanda Roberts, tells CBS Mornings Ghislaine Maxwell was a monster who took part in the abuse, and she should not have been moved to a minimum security prison camp while she appeals her conviction.
It is a slap in the face, the idea that she could potentially get a pardon.
Sky Roberts says they will continue to fight for justice for his sister.
She was a powerful voice in the survivor community. She allowed survivors to have a platform.
Michael Wallace, CBS News.
CBS News has learned more about top Justice Department lawyer Todd Blanche's interview with Jeffrey Epstein's co-conspirator, correspondent Ed O'Keefe at the White House.
According to a source familiar with the exchange, she told the number 2 at the Justice Department that Trump, once a friend of the late child sex offender Jeffrey Epstein, did nothing in her presence that would implicate him. That revelation comes as sources say top administration officials are discussing whether to make public some of the transcript or recording of what Maxwell told Blanche.
U.S. envoy Steve Witkoff met with Vladimir Putin in Moscow today ahead of President Trump's Friday deadline for a ceasefire agreement with Ukraine. The BBC's Steve Rosenberg.
Russian state TV showed just a few seconds from the start of the meeting. A smiling President Putin walks up to and greets Mr. Witkoff, and the 2 men shake hands.
President Trump has warned Russia he'll impose very stiff tariffs if Moscow doesn't end the war within days. Firefighters in Southern California have rescued a woman who was trapped in a chimney at a recreation building at a park in L.A. CBS News LA's Desmond Shaw watched from the K-Cow chopper.
The woman was inside of this impossibly small chimney right now. She is very lucky to be okay. When Urban Search and Rescue from LA City Fire was able to extract that woman, they had to basically kind of yank her out. She looked like she was in a little bit of pain, and then they strapped her to a gurney and lowered her down to the ground, and they just put her in the back of an ambulance.
A 5-week-old baby girl's been hospitalized after she contracted an extremely rare virus when she was bitten by a tick during a walk with her mom on Martha's Vineyard. Dr. Shira Duran at Tufts Medical Center in Boston.
It is not common for babies who don't walk to get tick-borne illnesses in general. This was really an unfortunate situation, obviously.
There is no treatment for Powassan, which can cause brain inflammation or meningitis. Dow's up 45 in early trading. This is CBS News. Exactly 60 years after President Lyndon B. Johnson signed the Voting Rights Act, civil rights advocates are still fighting.
Last week, Senate Democrats, including Georgia's Raphael Warnock, reintroduced a bill to expand and restore protections enshrined in the original Voting Rights Act. Warnock warns Republicans are turning democracy upside down.
In Texas, they're going back into session in order to redraw the maps in the middle of the decade.
Republicans in several states are trying to change congressional maps to favor their party and make it difficult for Democrats to regain the majority in Congress. Allison Keyes, CBS News.
Turns out financial agreements aren't the only things a couple of Ivy League universities cut with the Trump administration to settle claims of violating anti-discrimination laws and tolerating anti-Semitism. In addition to paying fines, Columbia and Brown will also share all college applicants' standardized test scores, grade point averages, including info about race. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we're streaming live as well on YouTube, so go check us out there. Isabel Lee and Paul Sweeney with you for the next 2 hours. This is the Bloomberg Intelligence Radio program. Coming up, we're going to check in with Enda Curran, Bloomberg Global Economy Reporter, get the latest on trade. And speaking of the latest on trade, red headline just crossing the Bloomberg terminal. President Trump to impose additional 25% tariff on goods from India. So there you go. We'll have full reporting on that. Mira Pandit joins us, Executive Director, Global Market Strategist at JP Morgan Asset Management, to get her thoughts on the markets. Damien Gardet, Bloomberg News health reporter on Novo Nordisk earnings. And then Geetha Ranganathan, she covers all the media stuff for Bloomberg Intelligence. She's going to break down these numbers out of Disney. The key takeaway for me was them doing a deal with ESPN. I think that's a pretty positive move for Disney. It kind of ties them to the NFL, which is the big sports property out there. So a lot to get to the next couple of hours on the earnings front in particular. Let's go to Lisa Mateo and get a Bloomberg Business Flash to start us off.
You got it in this Bloomberg Business Flash, brought to you by IBKR. Financial advisors, you can switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interest. You can learn more at ibkr.com/RIA. Well, we have stocks. Oh, they're advancing now. This is investors' way. A couple of things. President Trump's latest tariff threats. Of course, now this just coming out, like Paul mentioned, 25% additional tariffs on goods from India. So we'll keep you posted on that. But also investors sifting through more corporate earnings. So I want to get right to that. We'll start with Disney. Their shares are down about 3%. Strong performance in their theme park streaming business, but it was overshadowed by revenue from conventional TV networks, sports programming that fell short. And it looks like budget meals, pop culture collabs, they were a big hit for McDonald's. Its shares are up about 2%. Sales picked up in the last quarter, and that ended 4 quarters of declining or basically lukewarm growth. Uber, they unveiled $20 billion in new stock buybacks. Its shares right now, they're down about 2%. And we're keeping an eye on Apple's shares. Are up about 3.5% because President Trump expected to announce that Apple's going to agree to spend another $100 billion on domestic manufacturing. CEO Tim Cook actually expected to be there for that announcement. We shall see. All right, so we go to the NASDAQ, up 0.6%, 125 points. The S&P 500 rising 0.3%, 24 points. The Dow little changed, up about 40. And the yield space, the 2-year at 3.71%, down 1 basis point. The yield on the 10-year, 4.22%, and that is little changed. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Isabel.
All right, Lisa Mateo, thank you so much. We appreciate that, as Lisa was just reporting. We've got green on the screen here. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Isabel Lee. We're joined by Bloomberg's Red Brown. Red, what are you looking at today?
First one on my list is actually in the red, is Supermicro, down around 19%. The ticker for this one is SMCI. Currently the worst performing company in the S&P 500. Prior to today, the stock was up 88% this year. Now it's looking at around 50% 5% or so. So yeah, this move comes after the company cut its full year outlook and projected a quarterly profit that fell short of expectations. The kind of interpretation of some of those moves is that they're coming under increased pricing pressure when it comes to the stiff competition for AI servers. Obviously, the demand is there. It now becomes a question of how much they can spend, how much can they charge their customers for those. So yeah, it looks like increased competition is taking quite a hit on their outlook. They said earlier this year they expected to generate around $40 billion in sales. They've now lowered that to at least $33 billion. So quite a pretty significant hint there for Supermicro.
What about Match Group? What's going on there?
Yes, Match Group is right now, if we're looking at the shares, are up around 13%. That's its best performance since July of last year. And that's kind of moving in the opposite direction of what Supermicro did. They give a positive outlook for this next quarter. Kind of a reverse of a lot of the trends we've seen for this company. It's been kind of, I don't know, a bit of a negative sentiment around the company. The shares are trading up this year. But this positive move coming after, besides the outlook, the company also gave or pledged to invest another $50 million into product development. That's one thing that a couple of activist investors that have taken an interest in the company have been really pushing for, trying to reinvigorate profitability, trying to reinvigorate user growth, which is the company has really struggled with the last 3 years. It shrank that figure each quarter. So yeah, probably a positive thing for Match to continue to kind of invest in how their users interact with their product. They're trying to get rid of bad actors, trying to encourage more interactions, things like that. And also we'll be going towards a marketing budget as well. And if anyone's in New York and rides the subway, they see kind of a new dating app ad on the subway pretty much weekly. So we'll probably get to see a couple more of those as well from this.
All right, Red. Appreciate that, Red Brown. Earnings reporter for Bloomberg News, bringing us the latest here. And for more conversations like this, subscribe to our new Stock Movers Report. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Tariffs right back on the front page as if they've ever left here. But we had some news coming out. President Trump going to put an additional 25% tariff on goods from India, in part retaliation for the whole buying and selling of Russian oil and that whole thing. So let's just get the latest reporting here. Enda Curran joins us, global economy reporter. Enda, what are you guys looking at here on this tariff front?
Obviously fast moving, Paul, as you mentioned there. Now we have this new imposition of an extra 25% on Indian goods. So obviously in the one hand, there's the economic impact of this, the trade impact from this in terms of flow of merchandise goods between both nations. But really probably the bigger story here is just a geopolitical one, what it means for relations between India and the US. Of course, building an alliance with India, building up that Quad infrastructure has